When do you think the Fed should next raise interest rates, and how many times do you think you should move this year?
Well, as I always say, the number of interest rate increases depends on the economy, depends on how we're doing our objectives in terms of full employment and price stability. I think the data have been good there. I think the momentum in the economy has been very positive. So I think like the median view of my colleagues of, say, 3 or maybe even more increases this year makes sense to me. But it'll depend on the data, depend on how we're doing our objectives and how the economy looks.
So I also wanted to ask you about market sentiment, and it seems like markets are very buoyant at the moment, and that a lot of it is as a reaction to the prospect of fiscal stimulus. So I wanted to ask you about that, and whether you think if Congress takes too long to enact fiscal stimulus, whether perhaps there could be some pullback there.
Well, I obviously follow what's happening broadly with the markets, but I've fundamentally focus on the economic data, what's happening with jobs, GDP, inflation. So clearly the strong stock market, others factors are influencing the economic outlook. I'm watching those, try to figure out why that's happening, but really, focus more on the real economy, jobs, and inflation. So, the markets go up and down. I try not to focus too much on that and really just see where do I see the economy going and how we're doing our goals.
And another big point on the agenda at the moment is the Fed's balance sheet. When do you think it will be time for the Fed to start shrinking its balance sheet?
So we've said in the past that we're going to start the adjustment process of bringing our balance sheet to more normal levels once the interest rate normalization is well underway. So we've made a few rate hikes over the last couple of years. We're not quite there to well underway, but I would expect that assuming the economy progresses as I expect and we raise interest rates a few more times this year, that we'll be closer towards the end of this year to be ready to start that process of normalization of the balance sheet. Importantly, we're going to try to communicate as well as we can. It's going to be gradual. It's going to take a number of years to get our balance sheet back to normal, and I think it'll be very predictable. So I think it's just a part of bringing the monetary policy back to more normal levels, given that the economy is actually near our goals.
And when you talk about normalization, is there a number where you see that you could specify where you see rates settling in the longer run?
In terms of the federal funds rate?
Yes.
Well, there's different views on that. My own view is that a new normal, if you will, of the Fed funds rate is probably somewhere between 2.5% and 3%. I think the median view of my colleagues is about 3%, but I am concerned that some of the longer run forces in the U.S. economy have been pushing down what we call the neutral or equilibrium interest rate. So I think the new normal could be a little bit lower, first of all, than we've used to in the past, but maybe even a little bit lower than some people expect.
And how do you assess the international economic environment at the moment?
Well, I think that's been the biggest concern for me in the last few years, risks around China, hard landing, obviously developments in Europe. I think the recent developments have been relatively positive. They're still, in Europe, they still have a long ways to go to get their economies back to full strength, but mostly we're seeing better data, I think better positioning there. And in my view is, in terms of the U.S. outlook, that risks are pretty balanced overall, which is a good place to be given some of the concerns we've had the last few years.
And the Fed is one of the few central banks around the world which is actually raising rates at the moment and seems to be on a path to raise them more this year. In theory, that would be something that would make the dollar even stronger than it already is. What are your thoughts about the strong dollar at the moment?
I think that is part of the reason the dollar has gained so much strength in the last few years, because the rest of the world has been moving to more accommodative or easier monetary policy while we've been moving to normalization. I think that's just a statement that the U.S. economy has done a lot better than economies around the world, and when that happens, exchange rates tend to adjust. I think that markets understand that we're going to be moving gradually over the next few years to moving monetary policy back to normal. I wouldn't expect big movements around the dollar around that, given that that's understood, but it's always hard to predict how markets will react to changing circumstances.